So welcome everybody. We are going to be discussing on Amazon how to scale the right way using financially smart tools, people, and connections. Today I'm joined by Nachman, who is the CEO of ConnectBooks, an incredible service to really understand your P&L down to a SKU level, as well as Juan Perez, who represents Avask, the other incredible partner of Uncapped, who helps you understand VAT compliance across all countries. So I am Stephanie. I am from Uncapped. I run partnerships. And between the three of us, we will be teaching you how to calculate true profit, understand taxes in your margins, and learning how to scale SKUs responsibly using the right kind of capital. So I am going to pass it over to Nachman to start us off on ConnectBooks.
Hi, everyone, and thank you everyone for joining, and thanks Stephanie and Perez for joining us as well on the webinar today. So my name is Nachman. I'm the founder and CEO of ConnectBooks, and today we will be discussing about ideas of SKU profitability. So one of the things that we see a lot of times with sellers is they don't just understand their proper profitability, don't understand their margins correctly, and what ends up happening is that when you don't have the proper visibility on each product and getting the proper margins, you end up like just walking in the dark. You end up like you're not sure where you're walking, you're not sure if you're hitting a wall, you're not sure if you're not hitting a wall. So the thing that's really important is really to understanding the margins and really understanding better. So with Amazon, especially that goes for other e-commerce platforms as well. One of the things that ConnectBooks would really help, and that's really where we want to look a lot at, is understanding the profitability of every single SKU. Understanding like what it is. First of all, you want to break down all the different fees that Amazon charges you. You want to break down fulfillment fees, you want to break down commission, and we go very deep in that, meaning to say you want to also understand what is the storage fee per item, long-term storage fee. Another thing is placement fees. Like if when you're shipping your inventory to FBA, Amazon charges a fee to distribute it across all the different warehousing. And then you also want to account for advertising. There's a lot of different fees, removal fees. When a customer returns a product, you lose money on every return. Even if the product is sellable and still goes back into your inventory, you still lose money on the fulfillment fees and stuff like that to process the return. So what happens is with Amazon is it gets very complicated, and you want to be able to break down all those fees properly in a proper format where you don't spend like a whole day doing it. You have it within a click of a button, and you're able to really identify and see the true profitability on a product level. Now, this is only one aspect of understanding the profitability. There's another big aspect is having a proper cost. So always tell people like if you're selling three products on Amazon and a product costs you $5 and it never changes, and then that's very straightforward. However, most sellers are trying to scale and people are you're trying to build your business. And as your company scale and things move up, things will get way more complicated. So for example, if I buy, let's say 100 units, I pay $5 and then I sell half and now I buy another 100 units and now I'm paying $6. What is my cost? Right? So you want to have a proper system where you can log the changes when the cost goes up, cost goes down to make sure that when you're looking at your profitability, you're seeing the real true number. And then there's another big thing is landed cost. Landed cost is if you're importing stuff from overseas, what is it costing you to bring in the stuff on a container? The proper way how we usually work is we try to break down the stuff by CBM. CBM is like we call the cubic based measurement. So one of the things we try to do is allocate like how much the idea is more how much space does a product take up in a container, and then you want to say okay, so this product, let's say for example, if you're bringing an iPhone and an office chair in a container, an iPhone is very expensive, office chair is very cheap, but an office chair takes up way more space than an iPhone. So the office chair will cost you much more money to import than an iPhone. So you want to take that, you want to break it up, and you want to be able to allocate it to a product. So part of tracking a cost of goods sold is not just knowing when the cost goes up, cost goes down, it's also understanding what does it cost you to import. And then there's one other thing on top of that is the tariffs. Tariffs have been going like crazy. They're going to be up and down all different ways. So you want to make sure that you understand, what is it costing you to import? What are the tariffs? Also, products changes, cost goes up, tariffs goes off, importing costs can, there's times where a container could have costed 20,000, there's times where a container could have costed 3,000, right? So those prices fluctuate like crazy. So you want to make sure to get all those costs properly in a neat way recorded. And then along with that, you want to also have all the Amazon fees. So that's really where you get a full visibility and understanding your profitability so you can make sure that you're making money and not losing money.
Amazing. I love that. And when it comes to all of the other parts inside of there, like you guys have ad spend per unit and real prices as well, right? So you can see like the truest CM3 of a product on a month-to-month basis, right?
Yeah, so one of the things that makes ConnectBooks very unique is that we're not just an analytical platform. The background of ConnectBooks is that our software was built by a team of bookkeepers. Our background is we're a bookkeeping company. So what we try to do, what we call is like we have like our three pillars of ConnectBooks, but the initial idea of ConnectBooks was to pull the data from Amazon and integrate it properly to QuickBooks so you can have a proper set of financials and you know exactly on how much money you're making. So one of the things were with one of the things is that when we have to pull the data from Amazon, so in Amazon, when we pull data, there's two ways how we do it. We know how much Amazon put into your bank. So let's say you got $100,000 disbursement, we know that's $100,000. Then we also pull all the details of those transactions. Now, what we do is we make sure that all the details always match the bank deposit. The reason why we do it is because that's the number one thing in bookkeeping is a bank reconciliation is to make sure your books are balanced, to making sure the deposits are done right, and to making sure that the information that comes into QuickBooks is accurate. So in bookkeeping, the number one thing you want to do is always match the bank. So we always match the bank account. So the thing with ConnectBooks is like when you look at your sales, they're always going to be the most accurate possible because we constantly reconcile to the bank. So there's not a single fee that we miss because we always need to have everything in order to match the bank deposit. So if when I was talking before about prices fluctuation, I was talking more on the purchasing side, but prices also fluctuate on the sales side. We will show you like this product, the total sales over the time frame you're looking for. So if the price is up or down, that doesn't matter. And along with that, we'll have every single fee because we always match the bank deposit. And of course,
Right.
we'll always have the ad spend as well. And then, along with that, the landed cost and all the other stuff.
So if you all of a sudden saw an increase in a fee in Amazon inside of QuickBooks, you would kind of immediately understand that maybe they, remeasured your product and the dimensions are off and you need to go fight it because now it took you into the red where otherwise you were, cash flow positive.
Yeah, so usually the best way always that I always work with sellers is we call something called a break-even point. So we mostly work with bigger sellers, but the idea really is like you want to understand, like let's say for example, someone always asks me a good question, what is considered a good margin? So I was like, depends. So let's say I'm doing $500,000 a month in sales. And let's say after all the Amazon fees and my cost of goods sold, I'm netting 10%. So I have $50,000 in gross profit, but that's before my payroll, rent, and overhead. So if I'm working out of my basement, and I'm a one-man band, then 50,000, it could be a nice number. But if I'm running a warehouse with 10 employees, 50,000, you're underground, right? So the idea really is the first thing is when it comes to business, you want to understand what is your overhead. Your overhead means any fixed cost, meaning if you don't have any single sale tomorrow, or God forbid Amazon shut your account, what is that going to cost you to still keep your operations going? Once you understand your overhead, what you do is that will be considered your break-even point. So let's say my overhead is $50,000 a month. So I know, okay, so the first 50,000 a month, like that comes in goes towards my overhead. But what you want to also do is like understand what is your average profit margin. So let's say my margin is, let's say I sell a product on Amazon and I'm averaging 10%. So that would mean to say is when you have $500,000 in sales, um, your 10% margin, you will have if you have a 10% margin means when you do 500,000 a month, you will make 50,000 profit. Now, if your overhead is 50,000, means your break even point at 10% margin will be 500. And by a million, you would have made 550,000 in profit. And by 2 million, you would have made 150,000 profit. So what's very important is that it's not just like what I always say when it comes to bookkeeping, it's not just about getting the data into QuickBooks, it's about having it neat and cleanly structured where you have the proper visibility. So what I always tell people, first thing is, what is your break-even point? At what point do you break even? And at what point do you make 50,000? At what point do you make 150,000? Understanding that break-even point gives you like a very good metric at what the margin should be. And what you want to do is you want to afterwards, let's say, go into ConnectBooks and run your products based on break-even point. And what's very interesting is I remember once I spoke with a seller and he was looking at a certain product and we helped him identify that his break-even point was a 15% margin. So we set up a target that he should be making at least 18 to 20% margin on Amazon. So that's how he can at least cover his overhead. And once we identified that, I was shown that there was products that he was only making 10% margin. And I'm like, you're losing money in this. He's like, what do you mean? I'm making money. I said, because your overhead is more than 10%. So that's where you're losing it out. So what I would say is like identify your break-even point. I use that as a trigger, and then from there, just run through your P&L.
And this is brilliant knowledge because of a couple things. One, you're talking about the CM3, which is the net profitability of the business. That's one metric, but the real metric is the EBITDA, which is everything that comes after that. So when people don't know what their EBITDA is, they end up wondering like, why don't I have any money in the bank when it looks like I'm profitable? And all that ties into if you use this strategy that you're talking about and work with ConnectBooks in that way, every Amazon seller is pretty much on the same bandwagon at this point that we want to go omni and we want to exit. The goal is to exit. But if you don't know what your exit number is, what your freedom type number is, how can you back into it? And like that break even number is a key part in understanding like, how do I get to this amount of scale and exit for this amount of money? Not knowing all those little details in between. So that's amazing. And it really ties into everything that we do as e-commerce sellers. Um, with all of that information, how do we then understand going to Juan scale, expansion? What does that look like? Knowing all of the information that Nachman just talked about, like how do you then say, I want to take this to Europe, I want to launch in the UK? And you really like you can't obviously have one without the other. You need to know your numbers before you do such a thing. But how does that play into understanding like the method of scaling if you wanted to go global?
Absolutely. So, one of the biggest things that we see is just when you start scaling, you have a lot of different ghost charges and different expenses. Like Snackmo was saying, you stop really paying attention to them, and sometimes they kind of just fly under the radar and you don't realize it until it's too late. The same way that you have to really understand what your break even point is in your home market to make sure that you're profitable. Once you start scaling, you need to start really considering VAT obligations, where it's needed, where it isn't needed. And it's something that we call the alphabet soup of expansion. Every time you think Europe, you have the EORIs, the OSS, the EPRs, the VAT, just many different things that make it complicated. In the end, they're all the same thing, just disguised as different programs that can help you scale and just make sure that you have all of your actual VAT liabilities and any kind of obligations in check. One of the most common misconceptions, or really what gets most people, is the fact that they think when it comes to VAT, that's something that you just pass over to the client. You just give it to them, you just don't even pay attention. But the reality is, when you start importing into new countries, you're probably used to your existing costs. Let's use an example. Somebody who's selling in the US, they know the tariffs, they know everything, but they don't know the programs or anything available for them when they import into somewhere like the UK, somewhere like the EU, or even Australia. So when it comes to this, you have to really inform yourself and know that there are different programs or different avenues that you can take. For example, most people don't realize that import VAT is reclaimable. It's something that you can get almost like a tax refund. Essentially, a lot of people will reach into their pocket, pay that 10, that 20, that 50, 25%, whichever it is, depending on the country, out of pocket before they make their first sale. And that is recoverable as long as you're VAT registered within that country. To go over that, There are even countries like the UK that allows for you to postpone that and really just amend it in the filing, essentially not having to reach into your pocket and decreasing your cash flow before you make the first sale. So it's those strategies that most people really are not aware of because they're just super excited to start the expansion journey, get to the other side of the world and just start selling. I'm going to go and kill it. But like I said, they kind of get ahead of themselves. They put the cart before the horse and they don't look at their numbers. And that's where you hit the wall and you're like, okay, I'm bleeding money. Where is this coming from? And it becomes now kind of like a tug of war where we need to dial it back, take just a wider look and see what's going on. When it comes to global expansion, like I said, there's EPRs, there's the VATs, at the end of the day, is making sure that you're fully compliant in each of the countries that you're going into. Think of it as when you sell in the States, each each state has its own sales tax. The EU, it functions very similarly. You have each country just giving you their own rate, their own regulations, and you have to treat it as such. Most people think that, oh yeah, don't worry, Amazon will add the VAT, they'll collect and remit the tax. But culturally, we are used to every sale happening, and we know if it costs $10, it's not really 10, it's 10 plus tax. Whereas when you sell in Europe, it's really 10 with tax inclusive. They're used to that type of shopping. So if you're not adding it properly, you're not setting up, whether it's your Shopify, your Amazon, or any e-coms in general, you're going to be losing on that margin that is so important to keep you afloat. Because if you're running a tight ship and your margins are low, imagine now you're getting taken 20% in the UK because you're not really accounting for that extra 20% VAT that you should be charging the client because they're assuming that that's already included. So those are probably the biggest pitfalls that most people really fall into when they're first starting because they're not aware of the nuances of those new markets.
So it's not the same percentage across all European countries. It's different in each individual one.
Absolutely. Just to give you an example, it is 19% in Germany and 20 in the UK. And then you have other countries in the Nordic region, a little bit further north, where there is up to 25% VAT.
Wow.
Wow, 25%?
Yeah, it's probably that's the highest there is, but yeah, it gets up to 25.
Well, if
Wow.
you had 19 in one place and 25 in another, and you weren't taking that into consideration, you're either drowning or not. So that's a huge deal. Um, and it also plays into another thing that I've seen sellers do without really thinking about it is adjusting for the average cost of a good on the consumer side in each market. What sells for $20 here might only sell for $12 in the UK. And so you have to tie that into your approach as well. What have you experienced, Juan, in terms of like balancing sale prices and those different things with sellers across the board?
I think it comes down to knowing your market. To be completely honest, there are several products that when you have the quality, you have the market share, people already know your brand, you know you can sell it for a little bit more. The biggest mistake, and I don't want to call it a mistake, I like seeing this as a
It's a
learning
discovery.
opportunity. Yeah, it's one of those learning opportunities that you have when you first encounter a wall. You will adjust over time. Nothing will be perfect from the beginning. And you need to account for first, the EU, European clients are used to buying from other countries. So knowing that there are different VAT rates and knowing that maybe it is more expensive to buy from the neighboring country, they're going to be used to that because Amazon wasn't always available all throughout. Even till this day, most of the people in Portugal buy from Spanish Amazon. That's just the reality of things. So people are going to get used to the different prices. The pricing has to vary with the VAT rate on each country to make sure that you're not bleeding. At the end of the day, you cannot go in and think this is a one size fits all because you're going to basically be, let's say you go for the average in all of the EU. We always like to say that the average is 20%. What happens if you sell somewhere in Sweden or somewhere in the Nordic region where it is 25? Now you have 5% that is being bled out and you have no control over. So it really is important that if you know this is where we like to be strategic. Let me catch myself here. when you're thinking about selling in e-commerce in general, so whether it is Amazon, whether it is Shopify, or if it's somewhere more local like Ball or Allegro, you need to remember that because each country is going to have its own rate, because the import VAT is not always deferred in each of those countries, you need to account for those several aspects. There are countries that implement an eco tax, which is that EPR obligation. So you do have to contribute towards the recycling. If you have an electronics product, that recycling is going to be more or less expensive in Germany than it is in France. It really varies with the type of product and the filings that you have to do. So you really have to take into account all of these other costs that you do have, because when you're going into Germany, Germany can have very, very simple packaging rules when it comes to the recycling, but France is a lot more strict. So the cost and the contribution that you have to do based on the volume of sales that you have will vary. And that's also something that at the end of the year is going to go to your P&L, and you're going to look like, what happened here? Why am I not as profitable as I thought I was? So you have to take into account, like you mentioned, Stephanie, the different VAT rates, the contributions for the actual recycling, whether it is packaging, batteries, electronics, and also the import VAT, the customs, the duties, the clearances. Good thing is that once you enter the EU, you can put your product anywhere. You just have to really go through customs once, but you still have to do it. And many people forget that as a very important part of the process.
So if somebody's already selling in these countries and maybe they didn't look under the hood in detail, and I'm going to ask this to both of you guys, what would you suggest they do first?
Now, when you want to take it first?
I mean, the first thing is I would say the VAT is a very important aspect. I've worked, I was always like to say we're a bookkeeping company as well, so we get our hands dirty with the books, and we don't just like look at top line profitability and saying, oh, do X, Y, and Z. But I've dealt with a lot of customers in Canada where sometimes, US sellers where, it can ship a lot to Canada, like big numbers, and it's a lot of money on the table. So I've seen that happen many times, and there's also like a lot of times certain Amazon fees and other stuff that Amazon calculates VAT, which you can also get back. I believe Perez knows more about these things. Like I think like fulfillment fees in Canada include a certain VAT rate, which you can get back based on what you import. Um, so that's one big aspect. But I would say the first thing is like what ConnectBooks offers is start breaking down your profitability by marketplace. So we offer when we bring in your sales and fees and everything, we don't like commingle into everything. Even in the EU, we have all the different countries. We have every marketplace separately broken out. So what we can do is we can break out the data by marketplace so that you can understand the profitability across every single country, and then you want to start applying individual costs. One of the things that does sometimes get challenging is that when you buy one product and you sell it in multiple different countries and you want to start keeping track of multiple different countries, and meaning it gets confusing if it's the same product that comes from China to the US and then to the UK. So what a lot of times we do is we help sellers set up different SKUs. So that's when you have it as a different SKU, you're able to track different costs and know, okay, so like if I'm importing it to the EU, and then you have, let's say, a lot of shipping costs, you can also do separate landed costs for the EU. So that's how what what the profit on each thing. And I would say, putting the VAT aside, meaning on that, that's not that's really Paris is area of expertise. But I would say first thing is having clear visibility on the marketplaces and really understanding what the profitability is, and and then obviously digging into the VAT and all those stuff.
Yeah, and on my end, I would say that one of the biggest things that we need to really take account for is if you have someone who is going through this kind of situation, is reach out to us. We can help you. At Avast, our biggest goal is to make sure that you're properly set up so that compliance is not the issue. It's something that allows you to focus on actually growing the business and not have you being penalized or being blocked from selling. One of the most important aspects of it is making sure that your ecom, your livelihood, whether that is, again, Amazon or whatever platform it is, it's not going to be blocked because you don't have the proper product compliance, fiscal compliance, or just the right channels to do everything. We do suggest, and one of my personal recommendations that I tell to all my sellers is, before you start selling and shipping product to the EU, make sure you have your checks and balances. Everything needs to be properly dotted. So T's crossed and I's dotted. You need to make sure your VAT is good, your VAT is valid. You can actually store products within the country. You can sell. You have all of your EPR. Amazon will block your listings. They will suspend your account if something is missing. They will not allow you to sell within a country where EPR is required and you don't have that number. So there are several things that can really affect the livelihood of sellers if not approached proactively. So my biggest suggestion is, when you're thinking about expanding outside of your home country, look at what's out there, what other people are doing, but also rely on partners, on people that are in the space that can tell you what you need before you really get super excited and then forget one thing that can just stomp the growth.
Yeah, absolutely. And if someone was selling in the UK and this is like post-Brexit, is there anything that maybe they should be taking action on that they haven't, or that might be new, or that might be kind of flying under the radar, but it's important to know about?
So, yes and no. Honestly, one of the biggest things that has happened since Brexit is now you need extra VATs and extra EORIs if you want to sell all throughout Europe. Essentially, before you would be able to import into anywhere in the EU, including the UK, with the same importer number, which is called the EORI. That's your identifier as an importer or as a company. And since Brexit, now you're forced to have two separate ones, one for the EU, one for the UK. So if you're selling and you're doing everything only in the UK, when you want to expand into the EU, import directly into the EU, you need to go through that registration process. And the VAT, there's something that happens when it's kind of like the nexus in the US, where when you're a seller, obviously you're not incorporating a business there. You're registering for VAT because your inventory creates a physical presence. So it's called permanent establishment, and that legally forces you to register for VAT. That way you can report on the sales, and that way you can actually store inventory within that country. If you only have a VAT in the UK and you're trying to do sales, now it's going to be a little bit different. Yes, you can sell from Amazon UK. You can use the European fulfillment or network that's still working. But if you want to take advantage of FBA or the pan-European programs and just some of the better shipping times and costs, we always suggest getting a VAT in mainland Europe, because it's no longer the same because of Brexit. So they don't have to do anything because they're probably set up properly for the UK. It is only when they want to start selling in Europe that they now have those extra requirements, because the UK is no longer part of the EU.
Amazing. I appreciate that. Well, after those two things, it's my section is quite easy. When you know everything about your business and you've looked under the hood and you've properly understood exit and break-even numbers and expansion and where it works and where it doesn't, get an audit from Avast, get signed up with ConnectBooks, know all this information, you'll be able to effectively use capital to get from point A to point B. So there's a couple things that are used as buffers in Uncapped. We don't like brands that come knocking on the door for capital when they need it. As I've said in other webinars, and it's kind of known kind of in the financial world, the best time to take money is when you don't need the money. Which means you're strategically planning to expand. You have a plan for capital when you want to use it. You're on an upward trajectory. You apply at that time. Knowing all of your numbers helps you understand exactly how much capital you might need to expand, where it's going to be used, and where it's not going to be used. Because if you pour gasoline on an unprofitable SKU that you launched in the UK and didn't understand all of the stuff that goes into it, and you think you have a cash flow problem, you actually have a profitability problem. And pouring any gasoline on that SKU is just going to amplify that into a larger problem. The beautiful thing about working in a synergy with these experts and having Uncapped in that fold as well is that Uncapped underwrites businesses in a very non-predatory business safety type way, where we only fund businesses on the amount that they can comfortably take and still grow, and if you're in a healthy capital ready situation. So it's almost like a checkbox of understanding that your business is in a good position and it's scale ready, without actually having to know any of that information. If you're not ready, we're going to tell you you're not ready. We're going to tell you to work with Connect Books to understand your numbers and get to a capital healthy place. You might be overpaying for things that you can't see because there's data over here, data over there, and this kind of worksheet and that kind of report, and it's all over the place. And if you're in more than one marketplace, it's even harder to see clearly how profitable each thing is. Um, so it's important to understand all of the SKU economics of your business. It's important to understand if expanding into Europe and UK and Canada are things on your roadmap, if your products will do well there, and making sure that Avast gets you compliant. And then when you are ready to deploy those strategies, using Uncapped as a safe capital partner to then launch into those places and understand that we have your best interests at heart, at all times, and that we don't fund things that aren't ready. We have a pride in that, and I think that that is a very big, rare thing in the world of finance, especially in ecom. And I really pride Uncapped for being the group that's willing to say, you know what, not now. Please revisit in 2 to 3 months. You have some stuff to work on. So with that said, capital deployment should be used in a couple of ways. One is use it on what's working. So if you don't have an expansion plan, but you're growing, you can't keep stock in, you're just looking to like get to that next place, capital's the perfect answer. Use it on your most profitable SKUs. So the things that are just cranking out that you can't keep up with, that are just being flown off the shelves. And that is the perfect way to use capital because it's just going to amplify your operational system that is working for your business. The second best way to use it is when you have a great ROAS. If you have a 4x ROAS on ads that are just cranking out sales for you and you're getting plenty of organic traffic, kind of ties into inventory, but that's another great way to use it is data proven marketing. So anything that's currently working in your business is the best possible option for capital. Um, if you are a seasoned business owner and you have a system that's worked for you time and time again, that's been proven for your business, using capital on a new idea is all right to do. If you don't have a proven system where everything cranks out in a rinse and repeat type fashion, using capital on a new venture is a terrible idea. Because if you are like, oh, this is the next best thing, I'm making a mold, it's untested, you could potentially take out capital, launch a new product, and it fails. I've done this. So I speak from the heart when I say, like, please don't ever do that. Do not use borrowed money for a new idea. Launching into a new market with products that are unproven, launching a new product line, or paying your marketing bills on ads that might not be performing. Those are my three biggest pieces of feedback in terms of capital use. It's very important to be very smart about how you use things and to use them on proven methods. Nachman, did you want to say something?
I love this method a lot. It really speaks to my heart. It speaks to my heart also. But what I would say, you sound very similar to the real estate industry. I've seen people go out, buy a house, do a fix and flip, and then they lose their pants in it. But like, and then you have those like when you want to buy a house and you're like, if you go like for a hard money loan, they'll say, show me your past 10 deals. And
Right.
if you show me that you have a proven metric that you know how, like when it comes to real estate, you got to know the area. You got to buy, fix, and flip. And you know what? The same is for e-commerce as well. You got
It's
to
the
know the
same
product.
across everything,
Yeah.
really.
You got to know each product has its different space it has different uniques, and you gotta like what I see a lot of times with certain sellers, like they concentrate on a specific niche. They have a certain niche and a certain like subset of a certain category of product that they know well, and they know okay, and then they want to expand different variations to different types, so they want to go in different markets, and that's really where capital comes in. I can't agree more with you. Like, don't just start a new venture with borrowed money because it's a hit or miss. If you've
Yeah.
never done it, it's a hit or miss. If you've done it, then you know how it works, and now you're just building on top of that. It's a different ballgame.
100%. And like we don't just fund revenue, we fund profitability. Like if you're in a place where you're like, I need money, and then you apply, there's a good chance you're not going to get money because something in your system is broken. There's operational aspects of your business that are broken, and those need to be fixed first before you go putting borrowed money on top of it, because all you're going to do is flip your business upside down, and that's the worst case scenario, right? So like you don't want to get yourself in that position. You want to take a look under the hood and know the profitability of your SKUs before you go taking money, which is why I say, take money when you don't need it, not when you do, because when you do and your bank is at zero, you're not really capital ready, right? So it's like if you are capital ready, apply. Like get it while things are working, use it for things that are working, and then use the cash flow from those working systems to then invest in your new ventures. But definitely never use someone else's money to try something new. It it's too risky. Like sometimes it works. Some people have amazing stories and you see them all over the internet. It's just like, I did this thing and it was amazing and now I teach a course on it. That's not a great idea. Like, you know what I'm saying? Like, I did it once and I'm a guru. Like, no, please don't do that. Like, because I've been in this game for a decade and I've done it, had to bankrupt that business and it didn't work out very well. Like, you know what I mean? So just don't do that. Um, so yeah, it's just a way to keep yourself safe, a way to keep your business afloat, and a way to make sure that you get yourself to a place where you can then take this to a buyer and walk away with, compounded wealth and then do it again. Like that's the name of the e-com game. No one's sitting here retiring on an e-com business. You take it to exit, you do it again. You compound wealth and you live a wonderful life. Like that's what we're doing. So yeah, to me, it's like the perfect system. Like ConnectBooks, Avask, Uncapped really creates a great flywheel of like getting your business from wherever it is today to where it could be, and then just taking it to the bank. So I really appreciate all of you for being here. Nachman, if someone wants to get in touch and try Quick ConnectBooks, what should they do?
The best is just to visit our website, connectbooks.com, and then on the top you have your schedule a demo, and we'll be there for you.
Amazing. And what about you? How do we get in touch with Avask and discover if we're doing the right things or if we want to try something new?
I'm going to follow suit and say avastgroup.com. If you want to reach out to me personally, it's juan.perez@avastgroup.com. But best way to reach us, really get a consultation. Most of the information is available online on our LinkedIn and our website.
Amazing. And if you want to get in touch with me and talk about capital and exit and all the good things that come with that, you can DM me on LinkedIn. You can find me at stephanie.khalikyar, KHALIKYAR. Please don't try to guess that one, at weareuncapped.com. And I'm happy to walk you through it and see what we can do for you. So I appreciate everybody's time.
Thank you.
All
Thank
right.
you very
Have a good
much.
day, everyone.
Bye.